Sounds good. By the way, everyone, we're going to do a little 10 minutes of just recap over things that we've been talking about, and Doug's going to go over some of the futures trades that he's lined up. I'm going to look at some of the things that have gone on in the during this week, and just a little bit of a Friday recap before we get into trading today. Also wanted to talk about some of the things that I've been coming up with since the pegging experiment that we did, or the pinning experiment. There's some interesting possibilities there for some trades. And I'm still working on what we refer to as the Batman trade. Very interesting opportunities there also. It's a real complicated trade. The more you dig into it, the more it's got some nuances that are challenging. So we'll see what comes to that. It's going to be a fun one to work through. Let's see. Yeah, Mike, I was excited about that. Yeah, I'm gonna talk to you about some of the challenges of that trade. Why it's such a difficult one to sort out how to play it, but it's got a lot of possibilities for us. You know, the thing I like about that particular trade, by the way, that for anyone who doesn't happen to know, this is a trade that we're structuring on the drop in implied volatility after an earnings announcement. And we've all seen this. I mean, the implied volatility after earnings goes, can drop 20, 30, 40%. Man, the implied volatility on Netflix the other day dropped so amazingly after the announcement. Now, the price of the stock also went through the roof. Netflix really surprised everybody. But we're trying to find a way to take advantage of that safely. Now, I've got all kinds of ways we could take advantage of it. The key there, though, is doing it safely. So that's what we're kind of working through. As soon as Doug is ready here, we'll kind of play around with this a little bit, see how things go. Let's see. Just going to pull up a couple of things.
Oh, is my mic still on? Sorry about that.
Your mic is still on, and we were just kind of waiting.
So you guys can probably hear the rain. You guys can probably hear the rain that's
Yes.
beating down upon my roof right now. Okay. Okay, awesome. I'm going to take the floor real fast.
Sounds good.
And just, that's the wrong thing. Okay. Just wanted to quickly go over some of the key level stuff. I've got some screenshots of some charts that I traded over the past couple of weeks, just for anybody who is interested in taking a look at the futures. This is actually the only loss that I had so far. Now, I'm still kind of fine-tuning, where I want to set my scalps and things like that. Basically, bounced off or it came up above the resistance. It did actually come down enough to give me a profit, but on this particular time, I was trying to actually take 20 ticks instead of 10, and it didn't want to give it to me. So I ended up getting out, and then, of course, then it came back down a short time later. But these are some really good ones that I've been able to take over the past couple of weeks. This one was on the 18th in crude. It basically just, it came up above the resistance, came way up above the resistance, and then it finally dropped. And then I ended up, it got in short at 101.61 and bought it back at 100.69, so almost a full 100 ticks there. I got out that day because I actually had to go run some errands that afternoon. But if I had left my initial target in, which was this pivot point down here at 100.11, it did eventually come down, and it hit me there. This is another, there's going to be a lot of funny examples on this. This is one where I got short. I exited half for a small profit. I moved my stop to a break-even point, and it went up there and it stopped me out. shortly before it then came down. So had I held that, I would have made a lot more money, but I'm doing this in a pretty conservative fashion. I want to make sure that I don't end up turning a winner into a loser, like what happened on the British pound trade that you saw initially. So here's another example of that happening. It came up, played around a little bit, and I ended up getting out early. But then you get the ones like this. Here's one where it hit the resistance at 1298.42, and I was able to hold the position all the way down to 1289.75 before I finally got out. Here's another nice one. Came down, hit the support, got out at my 2 points, and then you see here this green line and this bar right here that touches the green line. Of course, when I get my 2 points, I moved my stop on the second one to that green line, and it came down and it just touched it. Didn't even go through it, just touched it, and then it ran. So that's the kind of thing that happens though sometimes. But what we're trying to do is get some more trades like this. This was a great one. Again, got short at 29. I bought one of them back at 27. Moved my stop to break even, but it never hit the break even point. It just dropped, and it ended up getting out at 13.18, just a couple of points above the target there. So a number of these. Here's one on gold that hit my exit. So this is what I am doing, and you'll see these orders. Oh, I thought it was on the correct page there. You'll see these orders updating at the website. For those who are maybe don't know exactly where it is, just click here where it says Live Futures Trades, or you can go up to the Live Trade section, and it's the second option here. As I place the orders and as those orders get filled, I am updating the spreadsheet, so you'll see it all here. Right now I've got these 2 orders working in the market. So that's what we're dealing with right now. So have I set a date for the futures class? Not yet, Mike. I've got to get one put together. Just don't have it done yet. But I'll try to get it done over the weekend a little bit. I am doing some fishing this weekend, but I'll try to get it done. So so that's it for me. I'm going to bring Doug back up so he can kind of recap what he's done this week. And I'm going to mute my microphone so you don't hear the rain anymore.
Thanks, Doug. I appreciate it. Let's see here. What have I done this week? Well, actually, I'm going to go with something that we did last week and want to retouch on this. Last Friday, we had a kind of experimental day. What we were exploring was a concept called pinning in the stock market. Had a really good, actually had a lot of fun with everybody. It was a really interesting experiment watching how the markets move and watch the dynamics of the options as you get close to that Friday expiration. We managed to catch one of the stocks that was kind of a target, Apple. At roughly 1 o'clock, we hopped in and we were looking at the market based off of the open interest and the activity that was happening around certain strike prices. We determined that 420 was going to be a target for a possible pinning in Apple. Now, what's pinning? Pinning is this effect that happens on expiration Friday, the last day of an option series, where the people who have sold the options, the people who have bought the options, and the people who are doing gamma trading, which is very, very fast trading, capturing small profits using a specific technique on the last day of the month, they're all trading around these strike prices in both the stock and in the options. This effect drives the prices to a certain, drives the price of the stock to be pushed towards strike prices on the options. And in this case, we determined that 420 was going to be the target. Ended up being an absolutely beautiful example of pinning. Now, we were looking at about 1 o'clock to 1:30 area. We decided that 420 was the target that was likely going to be the pinning target, and as if it was on command, the market literally just went down and started moving directly towards that 420 level right here. Bounced a little bit, came back, settled in within, well, 28 cents of 420. But I'll tell you this: within the last couple of seconds of the day, the price of Apple was at just about 420 and 8 cents, 420 and 9 cents. We actually had a little bit of a contest to see who could pick the price that it came in at. Considering how much Apple moves, people were pretty darned accurate. So what we're working on, a couple of things. Let me see, can I increase the size of the chart? Hold on. Maybe. There we go. Okay. Once again, we started in at 1 o'clock. By about 1:30, we decided that 420 was the target that we were looking at for the pinning effects. We watched the trade go down. We watched price go down, settle in, go a little past 420, bounce a bit, come right back to it. Now, I'm in the process of doing further analysis. There's, from what I can see, about 20 different stocks, 30 different stocks with a pinning effect may have some significance. And what my hope is by the time we come around to this next options expiration, we're going to have a pretty good toolkit for identifying possible pinning trades. A couple of things that we could have done here. Now, let me toss this out. I did at one point toss on a very, very simple trade. Mike, I may actually have some volunteers out there working on the database for this. What actually Alex, who I got to give some great credit to, helped me out in a huge way. He ended up making a script for TradeStation that allows me to basically put in a stock symbol, and it downloads all the data I need for the analysis. Now, if we've got anybody out there who's proficient in MATLAB, then I could use some help. But for right now, I just need to run through the analysis and try to get some of this stuff done. In a little while, I'm going to start to work with people, the volunteers that we've got, and kind of lay out a strategy for actually taking advantage of this trade. Last week was really just experimenting on things. But I'll be asking for help soon, believe me. Now, while we were watching this, when we hit about 422.50, which is literally right in the middle of 425 strike and the 420 strike, I stuck on a fairly cheap straddle. Now, this is not how I would recommend trading this, because straddles are going to degrade in price as you get closer and closer to the end of the day. And we actually watched this thing. The time erosion on this straddle was literally visible. We could watch the thing just slowly go down in price. And then as the end of the day happened, rapidly go down in price. But the point is, the movement that we got out of this, I got into the straddle for about 32 cents. There was a point in the day when that straddle was worth almost 68 cents. That was more than doubled the price. So within about an hour to an hour and a half, probably one of the worst trades I could have chosen for that, doubled in value. Really interesting opportunity for us to capture some quick profits on one day of the month. So really excited about this as a potential trade. If we can get this thing going, then once a month we're probably going to have a session focused entirely on pinning trades, and we're going to be putting together some strategies for taking advantage of those. Now, we've got another one going on here. This is the one we call the Batman trade. Now, I don't have a graphic on this. I apologize. John and I have both been experimenting on ways to take advantage of the implied volatility drops that we get from the earnings announcements. Now, this is the thing that's really interesting about this. You've got a front month, the really close month, that has a very, very, very high implied volatility. Sometimes, like on Google, we were seeing implied volatility on the short-term options getting up 120, 130. I think I even saw some with like almost 200% implied volatility. Netflix was the same way. And then the next month out, you also have some implied volatility in there, but it's a lot less. So you have implied volatility like 30 or 40 or 50. So you get this great big differential in implied volatility. Now, we're trying to structure a trade where the loss or the drop in implied volatility from the earnings announcement is basically captured as the earnings announcement happens. So we're trying to do what's called a negative vega trade. But we want to protect ourselves because sometimes these things move like crazy. I mean, as a matter of fact, this earnings season has had a ton of movements on it. Let's take a look at Netflix. All right. Netflix is a big one. This thing jumped like absolute mad. Closed out at 95.04, opened the following day at 113.90. But I'll tell you this picture right here doesn't even tell the whole story. During the pre-market and post-market, the price of Netflix was actually up over 120, almost to up 130. Massive, massive change. Netflix surprised a lot of people. But once again, we got this massive drop in implied volatility as the earnings event happened. So still working on some details. John put out a trade that was a good winner the other day based on this style of a situation. We put out a trade on Google the other day, which ended up being a slight winner, very small winner. But the key to it was that even though Google had a massive movement, we protected ourselves and we didn't take a loss. So ended up being overall an interesting, very good trade. As a matter of fact, some of the people who held on to the strangle portion, the protected portion, ended up making a lot of money on that over the next couple of days. So that's another new trade that we're working out, coming up with. Still working on the details, and we'll talk to you about some of that in a little bit. Have some questions for everybody about Excel and things like that. Now, that's pretty much what's on my plate. We've got a couple of earnings event trades that are coming up that I'm going to take a look at today. I've been putting on some iron condors and just keeping an eye on the market. Last week has been really, really interesting. We had Symantec come off as an earnings event trade. That was a profitable one for us. Let's see. Netflix over this last week was obviously a great big huge surprise and a massive market mover. Apple was another interesting one that we've been seeing recently. Lots of activity there. Apple jumped through the roof, had some extremely good results. The Google announced just recently, and well, a week ago anyhow, had some disappointing results. Basically dropped through the floor on that one. So we're seeing a lot of market movement out there, a lot of interesting opportunities for trading, and I'm excited because hopefully that'll keep going. I'm looking forward to a really good month coming up here. Now, Doug, did you have anything you wanted to get into to wrap up here?
No, I think that's it. I just wanted to, like I said, kind of go over some of the things we've done, and then if you're done, then let's just get into what do you got now? What do we?
What do we have now?
What's
well, let's
next?
Just take a look at the world right now. What's next? Actually, if you want to stay on the line, you might be able to give some insight into the whole GDP thing. I know that you were managing